which does to speak to our forecast for 2021 and do just a bit of a background on how we're positioning ourselves to ensure that we make the market more available, more attractive, and more vibrant. And so we're happy to be here speaking to this audience and thank the leadership group for your continued partnership. We've done many events with leadership group, and we believe this will continue going on. So my discussion today will really focus on how are we positioning Kenya as a market to really remain as resilient as we can on the back of a very challenging time we had in 2020. And really, I must say that we have been able to pivot similar to what leadership group have done and really help the market remain available and continue to operate normally through a very, very highly robust technological and a well digitized infrastructure. And this was wholly in partnership with the whole trading community in the country. So I'll be taking you through some presentation, and I'll probably at this point share my slides. Great. I'll take a cue from Martin. I hope it's visible.
Yes, it is, Jeff. It is.
Thank you very much. And just to give you a bit of a brief on who the NSE is, and I think it's important to take you through that. So my presentation will basically cover background about the NSE, our outlook for 2021, what are the key opportunities that we see, what next for the NSE, and spend a bit more time to take your questions and see how we can respond to them in a very, very clear way. So a bit of a background on the NSE. We are among the top 5 exchanges in Africa. In fact, if you want to look at the whole continent and want to see who are the leading exchanges in each of the subcontinents, so you'll see that Kenya occupies a very unique place for East and Central Africa. And the NSE, by that particular role, we are the leading market in this region. You'd find Johannesburg in the south, Egypt, Cairo in the north, and probably Nigeria in the west as really the leading lights of providing a drive towards capital markets and really being the leaders in that particular sector. We're currently valued at about 2.5 trillion Kenyan shillings, which is about 31% of GDP. But this is a number that we believe should be in the region of 4 trillion plus. If it was not for the COVID effects that led to a high devaluation of most of our counters, I think we'd be heading towards 4 trillion in terms of market cap. And it has been very steady. I must say that despite the COVID impact, a large number of our companies took quite some devaluation, but we've seen some good level of recovery towards the end of last year, and now we're at about 2.4 trillion. In terms of products, we have a wide range of products. We are the market with the second widest or broadest product offering. Critical to that is the equity bonds, but we've been able to develop new products like REITs, derivatives, exchange traded funds, and a Ibuka incubator platform, data training, and recently we are launching what we call the unquoted securities platform, which is a new platform for private and listed companies. Now, the NSE provides really the window of the vital signs of the economy. And why do we say that? We currently have almost 10 segments that really mirror the real sector of the country. So if you really want to have a sort of a window of what's going on in agriculture, you can look at the listed companies which are in the agriculture segment, and really using that data, you're able then to make your analysis about how the agriculture sector as a whole is doing. If you look at energy, again, we have representation there, companies in that sector. So we carry out, we are really your immediate access to really looking at the real economy because of the kind of broad exposure we have. And the 62 listed companies are spread across all these sectors, and they are the leading companies in this sector. So they're proud to give you both a bottom-up approach. Whatever models you want to use to analyze the economy, you're able to use both the bottom-up and the top-down to really get a good feel of what's going on in the country. We are members of key international organizations, the World Federation of Exchanges, the Association of Stock Exchanges of Africa, of which we are the founder member, and the UN Global Compact, where we subscribe to the ideals of high integrity and good corporate governance. But beyond that, we have an affiliation with key markets. Our key partners are JSE, the London Stock Exchange, as key partners in terms of products, in terms of technology. And so we really position ourselves and benchmark with the best. So if you really want to just sum up who the NSE is, I think we are really a very, very well developed financial infrastructure, not only for Kenya, but even for Africa. So just diving a bit deeply into our products, and maybe just to highlight those that might be relevant for this conversation. We have about 7 different categories. I think the key one is equities. The equities, this is where we provide a platform for listing of companies. So companies that are looking for capital, capital market financing, especially equity capital market financing, are able to do that by offering shares on the market, both in terms of primary offers or secondary offers. And over the years, as you've all been aware, we've been helping these companies raise this form of long-term capital, long to medium-term capital, but while at the same time allowing a high level of wealth distribution through allowing Kenyans to own all these entities through a very well available platform. Today, I would say that post-COVID, this is one great opportunity. If you look at the capital markets, and here I'm looking at the pool of capitals available from pension funds, life funds, it's well over close to 2 trillion shillings that is out there that is available and looking for assets which they can invest in. And a large part of these are long-term funds. So we are encouraging companies to really try and improve their funding mix of their balance sheets by looking at the market. And we've got a very clear program of how to take you through this journey, right from incubation all the way to getting a full listing through any of our platforms. Within this platform, we have 3 key markets. We have the main market, alternative markets, and the growth and enterprise market segment. So depending on your size and the requirements, we actually can accommodate any company within any of these platforms, and that's why we've created that. Another key product that we offer are the bonds. Bonds, these are primarily the corporate bonds and green bonds. So today, any company that is looking at raising some debt, you don't necessarily have to go to banks. You can come to our market. You're able then to, on the strength of your balance sheet, you're able then to raise money, what we call corporate bonds. But a significant development in our market has been the green bonds. We are increasingly getting a lot of investors asking us for sustainable financing opportunities, and the green bond is one area that we are really encouraging a high level of uptake. So if you are in the green space or you have any green projects, this is one area that you can explore, and we've had very good success cases. Last year, one of our companies was able to get a dual listing in Nairobi and London, and to date, they have come back to the market highly successfully, and will very soon be issuing another instrument to raise additional capital. So we provide that opportunity for you. We also provide opportunity for derivatives, where we offer a platform here for investors who would like to what we call securitize their position. If you don't want to take an exposure in the spot market or the stock market, you're able to get a civil exposure on the derivatives platform. It's one platform that we believe will provide a good hedging instrument for pension funds, life insurance companies. So if you have an exposure in any of our shares, you're able to protect the downside by using a derivative contract, which is already mirroring what's trading on the main market. In order to help our real estate sector grow and develop, we have developed a platform called the Real Estate Investment Trust. And here we offer an asset where investors are able to come into a real estate structure where they provide probably their land, and they're able to get then investors who bring money, and using that combined agreements, we're able to create a unitized fund. And hence this fund is able then to help them both develop more property or even provide them with exits. And we believe this is how real estate will be owned in the future. So we have one real estate investment fund at the moment, and we are looking at more and more coming on board. Besides that, we offer opportunities for training on the capital markets, training on opportunities available. We hold board of directors, inductions. We help in corporate governance, working with partners like the leadership group and others, and just help companies improve their operations. So if you really want to come to the market, you don't necessarily have to come to the market to raise money, but you can come to the market in order to improve your corporate governance structure, because once you get listed or once you get into any of our platforms, you're required to comply with certain standards, and that helps improve your operations. It helps build your brand equity. It helps really provide trust and confidence to investors on how you operate. Over and above that, we generate a lot of financial data, which we're able then to convert into data sets that help business improve. So if you want to know what's going on in the agriculture sector, in the energy sector, we have financial data that we have at the NSE that provides a lot of information and helps you make some very, very good decisions. So just to capsulate all that is that we have financial assets that provide opportunity for investors, as well as capital raising opportunities for issuers. So our focus this year is to really strengthen the supply side, companies that want to come to the market, and just to encourage them that really coming to the market is not only for the big boys. We have various platforms for even SME companies and startups. So we can accommodate all, and I think it's just about that little leap of faith that companies should take to come to the market, and really the rest becomes a success story. So that's what we're really focusing on, and working to demystify the capital markets. And our plan this year, working with the Capital Markets Authority, is really to break this down into small nuggets that companies can be able to understand how the capital markets work. Use this infrastructure. We are attracting regional companies, so we don't see why Kenyan companies cannot also take advantage of the opportunities that we have to offer here. Just a bit of the affiliations to just tell you that we are with the best in the world in the market. So what is our strategic direction as a company? So our vision is to really be the leading exchange and become the investment partner of choice. And that's very deliberate. A lot of what we want to do going forward is not necessarily NSE investing on its own. We believe that there's comparative strength in other partners, for instance, the leadership group, who are very good in leadership and corporate finance. So you'll find us working with the leadership group to run courses and to run trainings to help companies to strengthen their operational and improve their excellence. And so we've got a lot of programs that we're going to do in partnerships, and really to look beyond just Kenya, just see how we can position the market and bring companies both in Kenya and outside the country, both in Africa and even the globe. I'm happy to say that within the region, we currently have 3 companies that are listed on the exchange, and they've done very well because we have a deeper market, and they're then able to, in future, raise more capital easily in our market than even in their home countries. Our mission is to really link capital to opportunity, and that will continue remaining our tagline, which is discover opportunities, and you really identify with that. We have 4 key pillars we're focusing on. One is sustainable business growth, where we're really looking at how can we increase uptake of our products. You'll see a lot of us out there talking to you, trying to demystify the market and helping you come through. Operational excellence, very, very key part of our pillar. We would not be where we are today if we did not invest in operational procedures and in technology as a key lever of driving our business. Strategic partnerships remains a key target for us, working with partners like Leadership Group and others. We want to lever on the strengths of partners and ensure that we achieve that. And really, it's all about people and how do we enhance our knowledge and teams internally. And all this is underpinned by having a very strong innovation and technology drive as a strategy for the organization. Today, we don't have the excitement of having a floor where you have traders on them because technology has taken the whole of our business virtual. So we still miss that, but we do really have events and other things that we can even co-host. In fact, companies that want to do any events can actually come to the exchange, and get an opportunity to get a larger audience because we have over 70% international trading on our market, and that provides you with a very good international visibility if you really want to get your products and goods out there by coming to the market. So that's much I can say about us. So let's look at what are the really the opportunities that are available in the market and where we're coming from. So I wanted to start by just providing a snapshot of what's been happening in the last 12 months and how is this informing our decisions to go forward. So if you look at the impact of COVID, it had a very systemic impact across the globe, where all economies experienced declined growth, interruption in supply chains. Health became the #1 concern for all countries. And so we were not left out, and we went into a similar cycle. So looking at the first chart where you're looking at the global and local macros, globally, advanced economies all went into negative growth. Kenya as well, we also experienced that. If you look at the emerging economies, which is the orange bar, again, these were a bit higher in terms of how they were performing, but in the general trend was a decline. I think for us in Kenya, we looked at about a decline growth of about 0.6%. The projection is that we'll probably close at about something that just slightly above 1.2, 1.6% for this financial year. But that was really a big experience. And it just speaks to the fact that now the lessons out of this is that we should see how we can build more domestic capacity, domestic industry. How do we use our own resources to really build our economy? And also maybe how do we encourage a lot of interregional and inter-African trade? And I think that is the lesson that's coming out of all this experience, that we cannot wholly depend on the international export market, given the current experience we saw happening out there. But I must say that despite that, I think the diversity of our economy has been very helpful. We've been sort of resilient. The fact that we are not an economy that is skewed to one side of a sector, we have a more broader sector. Certain sectors were able to help the others that did work well. So for instance, tourism, our tourism sector took a very big hit, but we're able to rebalance that by having a strong services sector that is now emerging as a key sector for the economy. But again, the whole lesson, as I said, is how do we then protect and build local capacity, local industry to be able to really strengthen our economic capacity. In terms of the inflation, I think this remained within target range, mainly out of the very result that there was reduced demand for instance, oil and oil imports, and that sort of cushioned us. And also we had probably a fair start in terms of our rainfall. The agriculture sector was not as really badly affected as we thought initially, and that has helped control the inflation levels. If you look at the currency performance, we depreciated by about 7.8%. Again, in line with really the impact of the low inflow of capital of foreign currency due to limited exports. So I think we remained very well positioned, very well cushioned. I must say that as a country, we have one of the most stable currencies, and this informs investor decisions to come to the market. So investors want to come where there's some level of predictability, and hence that has really given a really fair direction that investors are able to undertake. So that's a snapshot of the macros. So I must say that COVID was real. It provided us with some key lessons on what we need to undertake, but also provided us with really brought the best out of us in terms of being a very resilient economy and trying to. What is the outlook for us when it comes to that? I think with the vaccines coming in, with the settlement of the U.S. elections, which happens to really have a macro effect on the globe politically, I think we're seeing some sense of a positive direction that is going to be emerging out of this. It's hard to tell. The biggest risk for us remains COVID and how it's going to play out, but we're fairly, we feel that there's some level of fair optimism when it comes to how it's being resolved, and we believe that's going to be helpful for us to go out of this. How did it affect the markets? It had a very big impact on markets. As you can see, what's been ringed there is really Kenya. We saw about a 15.4% decline in performance. I think just to give you a reflection of how COVID played out in our economy, up to March 13th, I think last year, the markets were very stable. But on March 13th, when we got off what they call case zero, we experienced a very sharp decline in the market trading. In fact, we had to provide a halt. Just like any other market, we had almost a 5% drop into trading. And that was really a sort of a lot of panic selling. But despite that, we just looking at how the whole performance of the market has been the whole year, despite the devaluation in prices, in terms of turnover, we are sort of similar to what we did in 2019. So it was more of a very stable year for us in terms of trading environment. I think investors saw valuations were better, especially the local investors. So for instance, if I was looking for a share, say like KCB, which was previously trading at 50, it's available to me at 36. So we saw a lot of stock ups happening, especially pension funds stockpiling a bit more affordable stock at those lower prices. Stocks like Safaricom were trading at below 20, I mean, just about 20 shillings. And so this was a good opportunity to buy. So domestic investors, retail investors came in a big way to cushion the trading environment, and that helped us remain steady. So looking at the ranking in dollar terms in Africa, we were the 4th best performing market last year. And really, I must say that it was very, very a good sign to really say we are best positioned to continue remaining a key player. What was even more exciting was that some of our products that we have been selling, for instance, the gold product, the Absa Gold ETF, performed extremely well. Was one of the best performing asset classes last year because gold became then a more attractive asset class, especially given the risks that the globe was facing. And we saw good turnovers and good price appreciations in that period. And so I say that the outlook and the opportunities is that the market is trading at a very low valuation. So today, if you want to, not really low, but below, I mean, at a very attractive valuation. For investors, it's a great opportunity to come in. You're able to come in and invest. For people who want to raise capital, I think the multiples that we're offering are still better than what you can get, even if you want to go into the private equity space. At multiples of 13.1 times EBITDA, it's still not a very bad multiple to consider if you want to do an issuance into the market. If you look at the resilience of the market, again, the return to our investors has been attractive, especially the gold asset class. And so I think there's a great opportunity for you to come and raise capital in the market. There's a great opportunity for you as an investor to also come and invest in the market. The market is starving for new IPOs, and hence we believe this is a good time to come in. Now, how are we supporting economic growth in Kenya? As I said, we are 31% of GDP in terms of market cap. So we support the economy in two ways. One, with the continuous inflow of capital from investors. As I mentioned earlier, out of our average trading volume of about, say, 1 billion shillings a day, 70% of this is international investors coming in. And so we are able to really help the economy by attracting more and more investors. Our intention is to really make Kenya an international financial center. We support the whole program around it, and hence having more and more investors come in. Our bigger picture is to make Kenya an emerging market status market, and that will take us now to the level that we can attract the very, very large investors, the likes of JP Morgan coming in, and we believe we are in that direction. Last year, our ranking improved under the frontier markets. We are now the third largest market in the frontier market space, and we are now sort of taking our place when it comes to that. So we believe that with time, as we increase the size of the market, as we get big players coming in, we'll become a very big regional market, and hence, as investors come in, they get to understand the market better. They get then to bring in direct foreign investments into Kenya, And we believe that's the direction we'll be able to achieve. What are the opportunities we see there is that today our market valuation is 2.4 trillion in terms of equity value and about 2.6 trillion in terms of bonds. And so investors have an opportunity of taking two things. One, you can, with a large size, that just shows you how deep our market is. And hence, if you want to raise capital, there's a high chance of success given the kind of valuation and capital that we have. Secondly, the bond market that we have is very, very developed, one of the best in Africa, and hence you're able to take advantage of this. And as I said earlier, our ranking in Morgan Stanley has improved, meaning that more and more international investors will continue coming to Kenya and are looking for new opportunities. And the first place for them to screen the country is through the capital markets. So take advantage of that. Look at those opportunities that we have to offer to achieve that. What are we looking forward next? Is really our strategic intent is to really build our market together, achieve our takeoff, and really go and move to the next level. And what we are aspiring to do there is to really, in the next 4 years, take Kenya from a frontier market to an emerging market, increase the number of companies from the current 62 to 100 companies, get a market cap or in excess of 50% of GDP. So if GDP goes to 10, we want to have a market cap of 5 trillion, and we think that will be achievable. Increase the level of liquidity in our market. Our liquidity turnover ratio today is 7.5%, meaning that if you look at the total value of stock that trades compared to market cap, it's just about 7.5%. We want to take that to 15%. We believe that will increase the level of activity and hence provide more vibrancy in the market. We want to become an alternative, or rather the main capital market venue other than the banking sector. And we believe this will help Kenyans explore that opportunity. And we want to make listing an aspiration for every company or every founder in the country. We believe that every company should have what we call, when you want to actualize, you should actually actualize by being a listed company. And we believe that we want aspirational companies to come to the market. Most significantly, Kenya having over 80% of companies in the SME sector, we want those companies to really find a way of coming to the market and really taking advantage of these opportunities to scale up to the next level. And we believe that's when we'll say we are now a leading market with a lasting differentiation and really flying as one to achieve a high level of success. And that's what we want to do. To catalyze all this, we believe that the government has a role to play. One, by providing a very stable market, a very predictable operating environment, and even providing companies to the market that can also be able to catalyze listings. And we're engaging with them, trying to see how we can bring more state corporations into the market to be able to also catalyze the growth and development of this market. And so that's how we believe the next journey will be. This is really the timeline. Our embarkment stage, which is our takeoff stage, is 2020, 2021. Our takeoff stage will be 2023, and really our stability stage will be 2024. So we are moving forward. We believe we have got all the financial solutions that can really, really help companies come to list and raise capital for their businesses. I wanted to spend more time taking questions, Martin. There's more. We condensed this into about 5-6 slides, but we believe that we provided the message that we are really waiting and available for you, and we'll really see how we can want to help our market go to the next level. Thank you, Martin, and I'm now ready to take any questions that you may have. As I said earlier, this is going to be our 4 key pillars: increasing listings, increasing product uptake, strategic partnerships, and enhancing market participation. So that's really it for this morning. I'll now be able to take your questions. Thanks, Martin.
Thank you very much, Jeff, for that very quick run through the stock exchange, securities exchange, and some of the opportunities that you're seeing there. I'm actually quite delighted that you are very bullish about the prospects, and maybe, you know, as we pick up questions from the audience, let me just say that in terms of questions, you can either post them in the chat box, or you can raise your hand, and I will see you, and We'll then take a couple of questions for Jeff. This webinar it was a 1-hour webinar, so we intend to stop at exactly 11 o'clock. So we've got about 15 minutes. So let's see as many questions as we can, or comments that you may wish to make there. Yeah, I can see a comment from a question there, actually. Maybe Jeff can elaborate on what the NSE is doing to attract retail investors in the stock exchange. So that is one question, Jeff. The other one is, could you expound on the data services that you spoke about? So those are two questions, Jeff. You may wish to take those first before as the others come in.
Thank you. I think that's a good question, the question on the retail investors. All right, so the structure of our demand side currently is that 70% of that is international investors, and then another 25% is domestic institutional, and then 5% is real retail. And so that's been a big concern for us, because what happens is that as the international investors sort of recede back, or whenever there's an issue, it sort of makes our market, the demand side, very weak. So we have recognized that retail is going to be a very, very important area for us, and we have to really find ways of attracting retail. So what are the things that you're doing? Number one, we've noticed that our retail investors need momentum trading. So they want to buy, sell, buy, sell, buy, sell. So we are going to be introducing something we call day trading, where you'll be able to buy a position, say at 9 o'clock, and be able to exit that position in another 10, 15, 20 minutes, depending on price movements. And we believe day trading will provide the desirable velocity for people who want to trade actively and get their settlements actively. And so we're working in the first quarter, end of the first quarter of this year, our day trading platform will be up and running. And we believe this will be one very exciting opportunity for retail investors. Secondly, we want to provide retail investors a very easy way to access and trade in the market. And so using our mobile phones, our iPads and all that, you currently have ability to actually buy shares as yourself. You don't necessarily have to walk to your broker's office. You can use their mobile phones, you can use their online platform to access the market and buy and sell. So that's going to be, it's actually available at the moment. We're going to look at ways of enhancing it, trying to work with the mobile service providers to see how we can get their clients to use their M-Pesa, Airtel Money, and all other platforms to come to the market. And so we believe that's going to provide an ease of access. So currently you can do that. Our work is to enhance that through other platforms to be able to achieve that. The third thing is about education. And so our programs are really going to focus on educating the retail public on all these products that we have. I know we've been doing it alone, but we want to do it now in partnership. So we're working with the universities, we're working with our partners in the media circles, working with government to really find a way of educating the public on how the benefits of investing in the market and the kind of returns you make, and really making it very, very easy for you to access. Our whole intention is for us to increase our retail trading public from the current 5 to 35% in the next 2 years. And we believe that's when we really have a statement and say that we are now really, really getting to a really strong market and a really well-performing market. So retail for us is critical, and we'll continue to drive that strategy. On the question of data, and so our key data is our financial data. We generate a lot of financial trading data. So today, if you want to know how did a company perform in the last 10 years in terms of its trading prices, we can give you that, and you can carry out your trends. You can carry out your research. If you're in school, you're able to be able to use that, do projects. But better still, we also capture a lot of other financial balance sheet and data and profit and loss data of companies. We are the custodian of all public listed companies' financial reports. So we're building data sets that will give you a clear view. If you wanted to see what's happening in a company X the last 10 years, all that data is available at our end. And that data set is something that we we want to provide the public with. So data is a key area for us. We are focusing on this, and we'll do many, many other things to provide information, because we believe information is what helps you analyze and make good investment decisions. So that's the kind of information we're looking at creating for our customers. Yeah.
Jeff, I see a question from Lillian asking, what's the outlook for next? Is there demand in the retail market?
Yes, as I said earlier, we started 2021 a bit stronger than we expected. We thought it was going to be a bit subdued, but I think we're seeing high positive performances. As you recently saw, one of our key companies, Safaricom, it's now trading at all-time high at about 37 shillings a share. And early in the year, it was somewhere just around 32 shillings a share. So a very high level of appreciation. And this is a highly retailed stock. And we believe that the demand side is good. So projections, our forward projections for 2021 is that with the COVID vaccines coming through and the global economy stabilizing a bit more, there's going to be a strong demand side of for equities, and that demand side is certainly going to lead to price appreciation. So I'm not giving you a crystal ball view. I'm just saying the trends are looking good, and I think retail investors should take advantage of coming in now.
Right. I don't see any. All right, I can see. Jeff, there's a question here about the IPO drought. What are you doing to attract state-owned enterprises like AFC, Kenya Seed, New KCC, large family businesses like Bidco, Naivas, etc., etc. So I guess it's about IPO drought.
Yeah, so the IPO drought. This is an area where we accept responsibility and say, yes, there has been a drought. We've not seen a big listing for quite some time. And it's an area that we've been working to address in a long time. Our strategy in the next strategic plan that we are now currently running is focusing on listings as a key pillar. And we've started very good engagements with government towards having them come to the market and raise capital through initial public offers and even secondary offers. I think if you saw last year, the Cabinet Secretary, National Treasury made a pronouncement that they want to revitalize the privatization program, which I think was very successful in the late 20s, the late 2000s. And that helped companies also in the private sector come in. And so I can say we are working very hard to get government to come to the market and really bring in a big company. We are looking at how we can get one this year, hopefully. And more so, we are focusing on existing companies that they have listed, who can now be able to offer more shares to the public. I think there's a liquidity issue, and investors are looking for the money. And our estimates is that government can raise about 250 to 300 billion by just coming to the market as they are today. And that conversation is ongoing. We are focusing even more on private sector, especially family-owned companies, to really come to the market, trying to sell them solutions. And I think there is now a very good level of interest coming in. 2020 would have been the year for us to achieve all that, but the COVID situation sort of deferred all decision making. And now we believe 2021 will be the year we're going to do that. And so I can only say, watch this space. It's going to be exciting. If you have money, start putting it ready as we bring on board these companies one by one. And I can assure you it's going to be, this year we're going to achieve a few. Thank you.
Jeff, you've mentioned the word COVID, and there's a question from Ruben, which says, how are you helping local organizations that took a COVID hit and are eager to renew and possibly rescale as they recover from COVID?
Thank you very much. As part of the economic recovery strategy paper of government, they've identified the capital market as one of the pillars or one of the channels to help them bring companies or support companies to revive their businesses post-COVID. And so we have got a program which we have called a Booker that helps SME companies to come and understand the market, and based on their preparation and how they'll be ready under the Booker program, we are then able to take them and show them the capital market instruments that they can be able to access. So for SME companies, we believe the best start is to come through the Booker program, because it will show you how to, we look at your financial structure, we look at your current weaknesses, and then we'll be able to identify the best financial solution for you, and we're able then to show you. As I said earlier, we have a market for SME companies called the Growth and Enterprise Market segment. And that market segment is where if you're an SME companies, is the best entry point to the market. The requirements are very low. For example, we don't need, you don't need to have total assets of in excess of 10 million. 10 million is a basic minimum. So if you're a company with assets of 10 million, you can be able to talk to us, and then we're able to prepare you and introduce you to investors. And if they like your story, they will take it over and take you to the next level. So we have got financial options for companies that took a hit during COVID and have got a very good business model, and they can be able to come through. And even if your business model is weak at the moment, the Booker program will strengthen all that and take you now and make you ready for the next, for a capital raising event. So yeah, just call on us and we'll discuss and see what options are available.
Thanks, Jeff. So let's take the last question from Sylvia, which is, what strategies are you using to manage investor perceptions on the corporate bond market, and what stakeholders can do to help build trust in this market? Jeff.
Thank you, Sylvia. And I know where that question, I know the background to that question. The background to that question, I think, was the challenges we faced with 2 corporate bonds that were issued in the market and did not succeed. And so those failures have had a very long-term negative effect in that particular sector. But that notwithstanding, Sylvia, is that the corporate bond market is still a very good solution, and it's really we've learned very good lessons from those other failures. And so our strategy now is to encourage companies to come to the market and have structures that have got securitization of capital. For instance, one of the companies that issued a bond last year was able to get a guarantor of 75% of the capital. And so investors were only taking a risk of 25%. And so you're sure that even if something happened to that company, 75% of the capital would be paid back. So ring fencing, corporate bonds using some level of credit enhancement is going to be the way to start. But we also believe there are companies that are strong enough to bring their balance sheets to the market. 2 years ago, we were able to bring a corporate bond for the EABL, and again, very successful. So if a company has a very good, strong balance sheet, they can still continue. The confidence is there. And for our end, we continue to monitor and really look at as we assess these companies, we're carrying out very strong assessments to ensure that they have minimum levels of failure. The other area is green bonds. I think green bonds are extremely attractive right now to international investors. So if you came with a structure which had a green bond wrapper around it, you'll be highly successful. But I must say that the corporate bond market is a market that we believe is still a very good market, and we are working very hard to revive it. And so far, we're seeing some recovery coming through, and we hope to get that done.
Thank you very much, Jeff. And as I mentioned, we didn't want to overrun this program. And so I'd like to try and just make a few closing remarks and bring it to an end. First, to thank you very much, Jeff. I would have liked to draw a comment from you on leadership, actually, because we are the leadership group. And I would have liked to ask you if you could just respond in a minute. How, as the exchange, you've been able to, what kind of leadership challenges you faced at management, at board level, and how have you been able to rally together during this period to come out strong? So maybe that's the final question you can answer from, and then we'll close it up.
Thank you. Thank you, Martin. I think ideally, it's a good question. One, because when you're working for the exchange, you're dealing with very many dynamics. You have multiple stakeholders to manage. And so here we are, here I sit, I have to change my view, my thinking on in different directions at very many times. If you're dealing with the media, if you're dealing with your trading community, your board, your international investors, all these stakeholders have got different requirements. I think one of the challenges Martin and I faced was how do I maintain a level of sanity, just managing all these multiple stakeholders. And what I got, especially working closely with Martin and the leadership group, is really how to maintain your temperament and just keep balancing everything out and developing a strong orbit. Maybe use the word called an orbit around you with very strong teams and colleagues who are able to run with those targets and help you, support you. So without a strong orbit, who are also very good leaders, then you can really get to a level of feeling a very good challenge, a very big challenge. So me, it's about multiple stakeholders. And the other one, Martin, was the highly the young staff and the lower level staff who are very, very impatient and looking for high level of achievement. And I recall when we started one of the sessions is, how then do you create or listen to the river? And one time you told me about listening to the river, because sometimes you could be up here and you forget about the guys down there. And what that has helped us is that at that lower level, we've created a transformation team that really informs us on what the challenges they face and what they need to achieve. And so, yeah, so I think the leadership is very good. It's something that you continuously have to build and really understand. And it's an evolving science, if I might say. Thank you.
Thank you very much, Geoffrey. I know that we would have liked to continue asking a few more questions and engaging in discussions, but I'd like to thank you very much for leading this discussion today. I'd like to thank everybody who came in to participate in this session. Next month in March, we've got an exciting session that will be talking about opportunities through the fourth industrial revolution. So look out on our website. We will also be reaching out to you directly so that you can join us again in the discussion next time. So thank you very much. Have a great day and look forward to seeing you again. And do explore the calendar of events on our website and look forward to seeing you. Thank you very much and bye-bye.
Thank you. Bye-bye.
The thinking behind the setting up of the leadership group was really to enable me to share my experience and knowledge gathered over many years of work in the public and private sector, and to enable future leaders to benefit from this knowledge, but also to continue to learn new things which were coming up in this space of leadership and unleash their potential in this space of leadership to become better. We have grown and expanded as an organization, starting off with myself as the only person within the leadership group. Today, 5 years down the line, we work with many people as associates of the leadership group. We've got a core competent of 4, and then we've got more than 10 experts that we work with to deliver our various programs. We have also developed partnerships with the academia. We do run, at the moment, a program on ethical leadership with Stellenbosch University in South Africa. We have partnerships with the Thunderbird School in Arizona, where we also partner on some of our programs. We have delivered programs through the county government system. So we've worked with a number of counties, deliver programs in the area of communication, in the area of service delivery and leadership generally. If I look back at some of the clients that we've worked with, there's literally no sector that the leadership group has not touched over its last 5 years that we're celebrating now.
Our engagement with the leadership group was very fruitful in that the team that delivered consultancy and facilitation of the program are people with experience.
The thing I liked about that is that it wasn't just a presentation that you make to everybody and say, you know, this is what we need to do. It was tailor-made.
For me, the most exciting was the coaching that I got from Martin, who is still currently my coach. Coaching, what does it do? It builds your confidence, it improves your communication skills, and it improves your work performance. So those three things for me, the coaching has delivered over and over again.
One of the key things that I can say has been very impactful or very insightful is around external stakeholder engagement and management. When you're growing a young company like we are, you tend to focus a lot more internally in the business, getting things off the ground, getting things running. And what you then miss out is what is happening in your external environment, the relationships that are critical to take you to the next phase.
Seeing the client's vision come to life is an exciting moment because it's transformative. It's, you know, you've made an impact in the society directly or indirectly.
We come into organizations, either commercial or not, at moments where real change is needed, that can be driven by external disruptions, that can be driven by bad performance or other factors. And our contribution is to find ways out. And that combination is quite exciting.
Being the one that is at the front line trying to help them solve those problems, being the one that has to interpret their needs and build solutions that respond to that, being able to support the process of delivery so that we can actually see and feel the impact that we are giving those organizations. It really makes me feel very, very good about the work we do.
The team has very experienced people in the field, and it's just good to sit with them and listen to their ideas and how they strategize and how they work, and having to learn from them and being given an opportunity to contribute. That's really fun.
What I find most exciting is the fact that we're able to combine and bring academic experience and practitioner experience into one model and use that to transform organizations.